All right, let's dive straight into this explainer and unpack the massive upcoming wave of AI public offerings, along with the frankly staggering paradoxes driving this entire industry right now. We are standing at a truly extraordinary moment for the global economy. Over the next few months, the biggest, absolute heavyweights in artificial intelligence are making a massive push into the public stock markets. But, as we're going to see today, the narrative being sold to the public is just full of deep, deep contradictions that end up impacting all of us. Just think about the sheer, mind-boggling scale of the money we are talking about here. Between Anthropic, OpenAI, and Elon Musk's xAI, those three companies alone are targeting a combined market value of nearly $4 trillion. $4 trillion. To put that completely astronomical figure into perspective for you, that is literally larger than the entire gross domestic product of France. We are talking about arguably the most expensive technology ever built in human history, and these companies are heading to the public markets to fuel it. But to understand the real story here, we've got to contrast all that hype with a pretty sobering reality. OpenAI alone is projected to lose $14 billion just this year. So these public offerings, they are definitely not a victory lap for highly profitable, stable businesses. Honestly, they're a desperate sprint for public capital. They need massive, massive amounts of money just to keep the lights on and the servers running. And if things go south, it's not just a few Silicon Valley billionaires who lose out. It's everyday pension funds that are tied up in those public markets. So, that brings us to Section 1, Massive Costs, Mystery Profits. This completely gets to the heart of the economic flaw in the AI industry as it stands today. You hear a lot of people trying to compare AI to the early days of Netflix, but when you look at the underlying mechanics, it's a totally different beast. Netflix has this beautiful model, right? They spend money once to create a movie or a show, and then that intellectual property just generates subscription revenue indefinitely. The AI model is basically the exact opposite. Currently, AI companies are often losing money even on a $200 subscription. Why? Well, because it physically costs them more in computing power to run the models than they actually earn back from the user. And to make matters worse, the incredibly expensive semiconductor chips powering these models run so hard and so hot that they burn out and have to be completely replaced every 3 to 5 years. It's just a massive, recurring money pit. Because this current math just doesn't add up, investors aren't actually buying into a functional, profitable business model today. They're buying into a highly speculative moonshot. When you look at companies like SpaceX, which obviously owns xAI, over half of their valuation is built on future opportunities that honestly sound like science fiction. We're talking asteroid mining, colonizing Mars, things like that. So as a result, a huge chunk of this $4 trillion valuation is fundamentally based on technology that does not even exist yet. It's an incredibly, incredibly optimistic gamble. Which leads us to a really fascinating pivot in Section 2, selling the AI doomsday. Consider this warning from Jack Clark, who is the co-founder of Anthropic, a company targeting a $1 trillion valuation itself. He's openly admitting that the AI industry is currently hurtling down the highway with a gas pedal pushed to the floor, but absolutely no brake pedal in the car. He literally warns that at a certain point, these systems could start deceiving us, developing in weird ways we can't track, and eventually cause us to lose control altogether. You have the actual leaders of this space openly declaring that they desperately need a way to stop their own technology. Which really leaves us with this glaring question: would you trust a company that wants to halt its own technology? Think about how completely bizarre this is from a normal business perspective. Usually, when you sell something, you're out there telling everyone how safe and great it is. But these companies are simultaneously coming to the public asking for trillions of dollars while explicitly warning us that their products could cause catastrophic job losses or, human extinction. It is such a deeply conflicting narrative. It's basically saying, hey, trust us with your money, but also, governments really need to regulate us before we destroy everything. All right, moving on to Section 3, the global tech divide. This structural difference perfectly explains why Europe is currently just watching this entire AI boom from the sidelines. Look, Europe has world-class talent, brilliant scientists, top-tier universities, but they completely lack a single deep capital market. While Silicon Valley just thrives on this massive appetite for high-risk and venture capital, Europe's markets are fragmented. They rely way more heavily on traditional risk-averse bank lending. And you just can't walk into a bank and ask to fund a speculative $14 billion a year cash burn. The financial structure over there just doesn't allow for European Google or European OpenAI to easily get off the ground. And because of that structural difference, we are seeing a massive, massive shift in global wealth. The United States has essentially turned into a financial black hole because there is a finite amount of investor money out there in the world, and everyone wants a piece of the AI pie right now. The U.S. tech sector is actively sucking in international capital from Europe, from South America, literally from all over the globe just to fund its own physical infrastructure. Let's bring this all back down to earth in Section 4, the Main Street reality. Because while Wall Street and international investors are hyper-focused on all these trillions of dollars, the physical, everyday impact of this AI boom is causing some serious friction in our own backyards. Main Street's actual view on all this rapid development is incredibly telling. A staggering 70% of Americans believe that AI is moving entirely too fast. In fact, negative views on artificial intelligence have literally doubled over the last 3 years alone. People are definitely not viewing this purely as some exciting technological frontier anymore. They're viewing it with deep, deep anxiety. And that anxiety, it isn't just about some abstract sci-fi future, it is about tangible, everyday costs. The economic pain of AI is completely front-loaded, and it is visceral. People might be worried about job replacement in 10 years, sure, but right now, today, they are angry about massive, energy-hungry data centers being built right in their communities. These giant facilities are draining local water tables for cooling systems and driving up local electricity prices. The public is looking at these massive, immediate costs and rightfully asking, okay, what exactly is the benefit to us right now? And that local backlash is manifesting into real, concrete political action. Politicians from both the political left and the political right are actually finding common ground on this. They are actively reaching for moratoriums. As it stands today, 19 U.S. states are either already implementing or heavily considering strict restrictions on the construction and expansion of AI data centers. The friction between the tech industry's desperate need to build and local communities' desire to protect their own resources is quickly becoming a major political battleground. Which brings us to the ultimate crossroads here. As these founders shift from their original philanthropic, open-source ideals toward chasing massive profits and trillion-dollar public valuations, we really have to ask ourselves this final, profound question. Are we actually okay trusting a small handful of private corporations and their executives with a technology that literally promises to rewrite the entire global economy? Or should the control and governance of this immense power be put directly into the hands of our governments? It's a question we are all going to have to answer, and we're going to have to answer it very soon. Thanks for joining me on this explainer, and as always, keep questioning the hype.